Hey there, everyone. Welcome to this end of the year special series on the final bar called the Top 5 Charts of 2023. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a pretty much rainy Redmond, Washington between now and the spring. As we go through this holiday season at the end of the year, it's a natural time to look back, reflect on how things played out through the course of the year, think about your opportunities, think about your wins, think about your losses, think about areas where you can improve your decision-making capabilities. And we hope that StockCharts was a part of your success in 2023 and certainly hope it's a part of your successful game plan for 2024. So far, we've talked about two of those top 5 charts. Number one was the S&P 500, really digging into the quarter-to-quarter performance because really 4 different quarters here in 2023. Chart number 2 is looking at interest rates. Look at the 10-year Treasury yield. Talk about Fed policy, rate hikes, potential lowering of rates in 2024, and what interest rates did to some of the leadership themes and really the shape of the yield curve, that inverted yield curve, and what that influences or how that influences equity prices. Today, we're going to get to our third chart. Before we get to that chart number 3 out of 5, I do want to let you know we have a special holiday special happening here at StockCharts. If you go to StockCharts.com/special, you can check out our holiday special offering for our membership. Our paid memberships at StockCharts really give you the opportunity to take advantage of all the capabilities of the StockCharts platform. A lot of the things we talk about on the final bar, things like our scanning engine, real-time alerts that come to your phone, your email, right on the website, having a series of chart lists to really manage all of those different analytical tools and different areas of focus in the financial markets. All of those are possible, but really way more effective if you're a paid member. So make sure you check out our holiday special now. If you are a new member, if you've never been a paid StockCharts member, now is a really good time to check it out. And again, go to StockCharts.com/special for all the information. Make sure you act before the end of December. Let's get to chart number 3. And what we're going to talk about today is market breadth. Breadth is one of the core parts of our own process as we analyze the markets every day. My morning coffee routine, probably 20 to 30% of those morning coffee routine charts that I review every day are breadth indicators, because for me, it's a great way of understanding, once we sort of make sense of the overall market environment using the chart of the S&P 500, this is that next level down, really helping you think about the conditions that individual stocks and sectors and groups, what they're experiencing. And a lot of breadth indicators are equal weighted, meaning while the large cap dominated indexes, really mega cap dominated indexes like the S&P 500 and the NASDAQ, they're very much, reacting to what the biggest names are doing, right? So Apple, Microsoft, Tesla, Amazon, NVIDIA, those are such large names on a market cap basis that the S&P and the NASDAQ are dominated. The returns are in many ways driven by those largest names. Breadth indicators are equal weighted, meaning Amazon counts just the same as JP Morgan, just the same as a mid-cap restaurant stock. As long as it's in the S&P 500, they all have an equal weighting. So by looking at breadth indicators, we get a better sense of what everything else is doing. And in 2023, that's arguably one of the important things to think about. Certainly going into 2024, I think thinking about more equal weighted measures as potentially that mega cap dominance starts to change a bit, breadth indicators should be a key part of your process. Here's the chart that I'm going to share with you. And this is chart number 3 that I'd like to include as our top 5 charts of 2023. It's the S&P 500 with 3 breadth indicators that we've talked about off and on through the course of this year on this show, but I really think highlight how the breadth conditions have evolved and really how the beginning of 2024 is set up in terms of market breadth. And I will tell you, euphoric is an adjective I would use to describe the breadth conditions here in mid-December of 2023. They're very, very strong. Any measure of breadth or momentum, pretty excessively strong at the moment. And I think that has good and bad implications for the first quarter of next year. So we have the S&P 500 at the top with the 50 and 200-day moving averages. And we're going back 3 years. So I actually have a little bit of time here, mainly because I wanted to think about what a bullish year like 21 looked like, what a bearish year like 22 looked like, and how 2023 sort of has some of both characteristics, to be honest with you. Now, the 3 indicators, we're going to go through each of these individually, and then I'll show you how I set up this chart. We have the Bullish Percent Index for the S&P 500. We have the percent of stocks above their 50-day moving averages, and then we have the McClellan Oscillator. All 3 of these are basically equal weighted measures of participation. And when we talk about breadth, I like to describe it as participation, right? Because it shows you, it really counts how many stocks are showing a particular configuration, whether it's their point and figure chart, their moving averages, or just the advanced decline data, all of these breadth indicators are derived on equal weighted measures of stock performance. So from the top, we're going to start with the Bullish Percent Index, and this is basically based on point and figure charting. This says what percent of members of the S&P 500 have a bullish point and figure chart. And if you know your point and figure charting, and if not, make sure you go to the chart school portion of our website, because it is a really good place to start if you don't know what those charts represent. But it's a great, very simple way of analyzing trend. And at any point, a chart using the point and figure methodology is bullish or bearish as defined by the most recent signal that you've generated. So when the indicator here is at 79%, that means about 4 out of every 5 S&P stocks, 79% of them, their most recent signal has been a buy signal. And that means about 21% have most recently given a sell signal. Now, it very rarely, if ever, I don't know if I've never seen these get anywhere near 100%. I've certainly seen the Bullish Percent Index get above 80%. That's kind of right where we're at right now. Now, one of the great benefits of technical analysis is, and one of the reasons why this show is called The Final Bar, is because I always tell people, start with the current price or the final bar, and then look to the left. And that's how you can understand where we're at right now relative to where we've been. So look at the previous times when this breadth indicator has been so excessive, right? Up around this 80% mark. You can see here in July of 2023. You can see here in December of 2022, in August of 2023. And then further to the left, we really didn't get up to this level that often, but we got around 75% here in April of last year, in January of last year, and then you have to go back here to April, May of 2021. Now, what's consistently happening when you look at the price action around those excessively bullish readings, and that's why you will probably know why I'm pointing this out as a concerning development going through the end of this year and really into January. The fact that this indicator is up around 80%, unfortunately, puts us in a very small number of observations where the indicator has been this excessively bullish, and it also happens to coincide with major market tops, right? So July of 23, December of last year. I mean, those are the last two observations. Those were pretty major tops here. Now, again, like in December of 2022, ended up being about a 3 to 4 week decline before the uptrend resumed, but it was a pretty meaningful decline, right? We certainly came back. Now, I have a horizontal line here around 70%, and I have another horizontal line around 30%, because that's usually the general level that I would look for, right? Above 70% means we're excessively bullish. Below 30%, we're excessively bearish. And if you look at when we've gone below 30% and then come back above that 30% line, and that's a crucial a pattern to look for, that usually coincides with a major market bottom, really the bottoming pattern or the bottoming period being completed. And then to the other side, when we go above 70% and come back below that overbought level, for lack of a better term, that usually means a significant market top. So again, just look to the left at when we've gone above 70%, and then when we come back below there. And that's when you really can identify that a top has occurred. This is rarely a leading indicator in my experience. It's more of a confirmational indicator, right? So you have the S&P testing the 200-day here in August of 2022. We pulled back for about a week before the indicator went back below 70%. That basically said, yep, that peak we just saw in August, that was a major top, and suggests that you stay clear of this market until some sort of bottoming pattern emerges. So right now we're at around 79%, which means for now it's telling me two things. The number one, the breadth is very strong, which certainly is what it feels like coming off of the October low. It wasn't just Microsoft and Apple and Nvidia rallying off of those lows. Pretty much everything, right? Financials, industrials, healthcare names, defensive sectors like real estate all had a strong November into mid-December, and that's why this breadth indicator is so positive. And what you're looking for going into the beginning of 2024, and we're going to be recording our market outlook for 2024 here very, very soon, probably updating that at the end of December. We'll share that with all of you. But one of the things I'll be looking for are these excessive breadth readings to dissipate, and looking for an indicator like this to go back below 70%. So there's a little taste of what we might talk about in our 2024 market outlook. So that's the Bullish Percent Index using the S&P 500. By the way, we have Bullish Percent Indexes for other groups, for individual sectors, for broad things like the NASDAQ 100. For Toronto, we have a Canadian Bullish Percent Index. So depending on what area of the markets you're looking at, we might have a Bullish Percent Index that really speaks to that area. I look at the S&Ps more than anything. The second panel now down is the percent of stocks above their 50-day moving average. And we've covered this pretty widely on the show. At least once a week, I bring up the chart looking at the percent of stocks above their 200-day and above their 50-day, because for me, it tells you a great deal about the strength of the individual stocks that make up those markets. We're currently around 91% here as we record this in mid-December. Same exercise we did on that first indicator. Look at where we're at 91% and look to the left, and you will find the air is very clear up here, and it's very rare that we've gone up to these extreme levels. The last 3 times that this indicator has gotten up to 90%, some familiar periods because we just talked about them. July of 23, basically late November of 22 and August of 22. And those were 3 of the more significant peaks that we've observed over this period. Same as above, I actually have a horizontal line around 75% and another one around 25%. I actually bumped the levels out a little bit just on my own experience with these indicators and some of the levels that I've seen be pretty meaningful. But again, think about, in your own process, you may want to customize those based on how aggressive or how conservative you want to analyze the markets. But for me, getting above 75% and then looking for a break back below there, that is what is usually indicated a major top. When we get up to around 90%, and then when we get back below 75%, that has indicated a pullback phase that is sort of already in play. So what this means here in late 2023, and as you look back through the course of 23, you see that both of these indicators have done very well at identifying major bottoms when they get below sort of the lower extreme, and certainly when they come out of that lower extreme is when you identify a pretty significant low. Look at March of 2023, how both of these went below that lower threshold and then came out of those regions by the end of March, really suggesting strength going into April. Look at how the rallies often got above that upper threshold, and coming out of that extreme reading really suggested a bit of a pullback. So again, as we are looking at the evidence here in December, and I'm looking back at what this has told me over the last 18 months, it's told me 2 things. Number 1, prepare for a significant top, and number 2, wait for confirmation when we come out of those extreme readings. Now at the bottom we have the McClellan Oscillator, and I'm going to show you a different chart because I often show the McClellan Oscillator in a bit of a different visual, and just so you know what indicator we're talking about. It's this one, and I have a color-coded version that I like to share. And I almost made this the chart, to be honest with you, but I thought it'd be good to think about some other breadth indicators and how they're related, because that's really a more holistic way of thinking about breadth in 2023. But this is the chart that I referred to often on the final bar, and for good reason, because it ended up being just a beautiful way of illustrating bull and bear phases. Now, I've highlighted in green anytime the McClellan Oscillator is above 0. I've highlighted in red anytime the McClellan Oscillator is below 0. And if you see it's not quite perfect, that is the imperfection of your host. That's not anything with the StockCharts platform. It's just me not drawing the lines or the rectangular shapes as beautifully as I probably could. But given more time to really precisely lay these out, it might fit the data a little bit better, but I think you get the idea. What's interesting about the McClellan Oscillator, it is based on advanced decline data, right? So one of the common ways we can analyze performance or participation is by looking at any given day, how many stocks close up, how many stocks close down. And that results in the daily advanced decline reading, which we report on StockCharts and many other outlets report on as well. You'll see them on TV often. You'll see them on brokerage accounts. I know with ones that I've used, they'll often indicate advancers, decliners on a given day, because it's a really good way of showing short-term strength or weakness. The problem with that advanced decline data every day is it's very short-term, right? It's just telling you about the short-term conditions. So there are a series of indicators that attempt to broaden that out and look at trends in advanced decline data over time. What we call a cumulative advanced decline line, we've referred to on the show pretty regularly, and that is where you take the daily advanced decline data and string those values together. Then you get what's called a cumulative advanced decline line. Take that one step further and you have the McClellan Oscillator. It basically smooths out the advanced decline lines with 2 different time periods, 2 different weightings, and then the difference between those 2 turns it into what's called the McClellan Oscillator. This was designed years and years ago as a way of turning the advanced decline data into an oscillator. So this is kind of like looking at an RSI for the broader markets, but not based on price action, based on breadth data is the way that I would think of it. As you can see, we oscillate around the 0 level, right? So generally speaking, above 0 is bullish, below 0 is bearish. And again, I've color-coded those green when we're above 0 and red when we're below 0. And if you looked at the S&P in the bottom panel, you can see how well this tends to match the data, right? When the chart is highlighted green, those are the bullish phases. When it's highlighted red, these capture most of the bearish phases. And it's usually pretty early, right? When the market's going down and it's shaded red because the McClellan Oscillator is 0, when it turns back positive, it's not like you wait way later into the rally. And a lot of the technical toolkit is more lagging. This is actually pretty good at anticipating shifts in the breadth data. And so when the McClellan Oscillator goes back above 0, it usually indicates early warning sign that things are starting to turn. So as you look through the course of 2023, this has been one of my favorite indicators at just capturing these short-term swings. You know, usually 2 to 6 weeks on average, these time frames have been. It's really captured most of the upswings and downswings, and even some of the consolidation phases like we had in April and May. Going into the end of this year, of course, it's obviously bullish, turned bullish right after the October low, about 2 days later, and from there has remained above 0. What I'm looking for going into the beginning of next year is when this indicator goes back below 0. Now that will not be the top is in, make sure you sell everything and go to cash kind of climactically negative signal. It's not like the Hindenburg omen, which is designed to be a big major topping signal. This is more telling you that the short-term rally phase we've just experienced is probably exhausted, and now we're in a short-term pullback phase. So going back to our main chart, I have the McClellan Oscillator. Instead of doing that color-coded version with the line, I'm actually showing it as a histogram, because indicators that fluctuate around 0, that kind of oscillate around a 0 level, a histogram is a really nice way of showing that, because if the bars are black using this color coding, meaning they're above 0, that tells you the conditions are bullish. When they're red, when it's below 0, it tells you the conditions are bearish. And again, just glancing up at the price, you can see that it matches pretty well those sort of shorter term price swings. So now on this chart, we have 3 key measures of breadth, and I would argue 3 indicators that tell you a lot about how the market conditions have changed over time. And just looking at the Bullish Percent Index as we wrap up this chart number 3, look at how in a bullish phase like 2021, this indicator rarely got below 50. And when it did, not for long, right? The momentum was so strong, the breadth was so positive because pretty much everything was going up and staying constructive. You never really had those bombed out pullbacks. And if you think back to 2021, the biggest drawdown was about 5%. I think it was this period in September, October. But most drawdowns were very quick and very light, right? Not too painful before the uptrend resumed. 2022, more of a bearish year, a bearish trend. You can see that the indicator often got very low, often down to single digits, which ended up being some of the major buy signals in 2023. 2023, kind of in the middle, right? And that's what I wanted to highlight. We got above 70% a number of times, and again, those pullbacks below that 70% region ended up being the major highs in 2023. When we got below 30% and popped back up, those ended up being, arguably the 2 most important buy signals after the beginning of the year, after the December low. So as we think forward to 2024, what are you looking for? Well, what's happening right now is we're ending the year in a position of strength. The McClellan Oscillator has been above 0 since essentially the October low. The stocks above their 50% is up at 91%. The Bullish Percent Index is up around 79%. So these are at pretty much the upper end of the range that we've experienced over the last, probably the last 10 years, to be honest with you. But we have been up there before, and if you look back, the things that I would tell you that this sort of configuration suggests is, number one, recognizing the strength of the uptrend, basically telling you that it is a broad advance, right? Earlier in 2023, I think you could describe a rally as being a very narrow rally. For example, the beginning of June, as we're making new highs, but the breadth is not too extreme. Sort of tells you this is more of a narrow advance driven by the mega cap stocks, the Magnificent Seven sort of trade. Now, I don't think you can describe this market this way, right? As the S&P is testing all-time highs around 4,800, these indicators are getting very overheated, right? So it tells you that this is a broad advance. Most things are going up, this is not a narrow advance, it's a broad advance. So that's the first thing I think you can take away from this chart here in December. The second thing I would say is remember that when you get to these extreme readings, it usually indicates we're at the latter stages, right? Or we're in sort of in football season here in December. So I would say we're in the 4th quarter, right? We're not in the 2nd quarter. This isn't a midstream kind of move. We're sort of more likely at the end of this rally phase. So that's the second thing that I would tell you is it's suggesting that a major top or at least a meaningful top is probably nearby. The third thing that I think this tells you is to be patient, right? Remember that when breadth indicators like this become positive, I'm looking back at like March, April of 2021, they can remain above upward extremes for quite some time, for weeks, if not months. So just because we go above 70% on its own is not a negative signal. It's when we come back below that 70%. Similar to like looking at an indicator like RSI, it's not about when we become overbought, it's when we exit that overbought region that's the real signal. That's what you want to be patient for. So going into the first quarter, I'd be looking for these indicators to go down. And I would argue that the bottom indicator, the McClellan Oscillator, is probably the most important one to look for because that's your early warning signal. This goes below zero, and that tells you that the immediate short-term trend has now rotated lower based on breadth. Then you look for confirmation from these top two. Now, to finish off this video, the third of the top 5 charts of 2023, really digging into some of the breadth conditions and how they evolved through the course of 2023. I just want to show you how we set up this chart. And again, it's a really good time. I hope StockCharts was part of your success in 2023 and hopefully part of your learning experiences as well. And we certainly hope that StockCharts can be a part of your successes in 2024. So how do you set up a chart like this? Well, this is using an indicator. Basically, we have indicators. Any of these panels below the price are called indicators. And we're just using one called price. And this is just a way of bringing any other data into your chart and bringing in prices of another stock, an ETF, an index, or in this case, breadth indicators. All of the breadth data on StockCharts is tickerized. And what that means is you usually have a dollar sign or an exclamation point and then some sort of ticker. Do I expect you to know these tickers cold? If you're a power user like me and some of the other hosts on StockCharts TV, we kind of know these tickers because we've looked at them so long. But if you don't know them, I would tell you two things I would suggest. Number one, find someone like me who has already built these charts and then get the link, what's called the permalink. And the good news is, with all the charts that we're showing on these top 5 charts, we're going to send out a chart list with all of the links included, so you can use these charts, you can copy them, and if you're a StockCharts member, you can edit them, share them, and do whatever you want with them. But these are the tickers of the 3 breadth indicators that we shared today. The other thing you can do at any point is click on the magnifying glass and just type a keyword, right? So if you type Bullish Percent Index, you'll see the tickers for the S&P, the NASDAQ, and other Bullish Percent Indexes on the StockCharts platform. One final note, we use the McClellan Oscillator. These are just using lines, but the McClellan Oscillator I wanted to show is a histogram. And here's the way you do that. When you have the indicator to the right, it may actually look like this, and you'll see this little guy that says Advanced Options. If you click on that, you can customize colors, you can customize the height of the panel, you can overlay indicators like moving averages or horizontal lines to visually represent certain things. What I did was I changed the style from auto or solid line down to histogram. You see we have a lot of other things, and again, depending on what story you're trying to tell, what points you're trying to convey with your charts, setting up using some of those different styles could be very, very helpful. That's it. That is our third of our top 5 charts of 2023. This time we're talking about breadth, and again, I would encourage you to think about breadth analysis as part of your overall market awareness, what I call your situational awareness as an investor. We like to talk about breadth on the final bar because for me, it's ended up being a vital part of my toolkit to help me understand a narrow versus broad advance, right? What's the participation like? And that has been a key theme in 2023 when it's been a narrow advance dominated by the Magnificent Seven or more of a broader advance like we're arguably seeing here in the fourth quarter. Make sure you have these tools available in your toolkit as you prepare for 2024 and beyond. For StockCharts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a great holiday, and we'll see you in 2024.